What's up, traders? This is your boy Ace Bookie coming to you live and direct. Have a special video for you today. I wanted to go over in detail my most profitable trading setup of 2019. And that setup happens to be the long first green day. So buying stocks on the first big green day has been the most profitable trading setup for me 2019. And I want to go over the actual characteristics and criteria that I look for whenever I choose to play this type of play. So first and foremost, we really want to be looking for recent and former runners that have a history of spiking multiple days. So we don't want to try to be buying first green days on stocks that usually are one and dones on the daily chart. Look for the history of a run up, multiple days. As always, volume is the most important indicator. Make sure the volume is high relative to the average volume trading days, and you also want to look for a volume breakout over previous days. It is best for the stock to have a catalyst when buying on first green days, but it's not always required. So just know that the more catalyst equals the better chance for the setup to work, and usually equals a bigger move as well. So one thing to keep in mind: first green days don't have to always be after a red day. They're usually counted, or I count them, if the green candle and the volume candle is significantly larger in range than an average green day. And I'll show you that on a chart. I'll show you exactly what I mean by that. When longing a stock on the first green day, it is best to buy off of a major intraday support level early in the day. This offers the best risk reward. So that's one entry that I look for when buying first green days, is buying off a major intraday support level, buying on the dip. Another entry I look for is buying the afternoon high of day breakout. This one seems to repeat over and over again. And that usually works the best when it's close to power hour, which is 3 p.m. Eastern. So when buying first green days, the intent is to sell into a morning gap up slash spike, the next morning. You want the stock to be strong in the morning, and you want that momentum to carry on in the form of a spike. Um, a lot of times the stock price spikes into the close, and it actually makes a decent move. And when it does that, more often than none, you'll see me take half my profits or two-thirds of my profits right into the close, um, and then try to sell the remainder the next morning. um, that that reduce your risk, so you don't have to hold it overnight, keeps you safer. And it's always good to be locking in profits. You always want to be paying yourself along the way. That'll keep you confident, and it'll allow you to be more patient with these plays as they play out. In the event that it doesn't gap up or have a morning spike, you need to cut it quickly, whether you have profits or whether you have losses. If it's showing support coming in, and there's bids stacking up, then you can probably give it some time if it doesn't do anything right at the open. But if it's opening red on the day, gapping down, you just need to go ahead and get it cut. So these are my criteria that I look for the first green days. Um, and I want to get into actually looking at some charts of some first green days. So first one is GHSI. This one is a recent runner, definitely a multi-day runner. And on this particular chart, I consider the first green day to be this day right here, um, for the first instance. So number one, this is a recent runner. You can't see from this chart, but it has a history of running beforehand. But number two, the volume is more than double the usual range. Whenever it was in this period of consolidation, where the stock wasn't really doing much, the volume was minimal, well less than 10 million shares on the day. But on this particular green day, not only was the volume, you know, more than double, but the range of the actual green candle is more than the average range of these green candles. So this is considered to be a first green day for me. I'll be buying on this day and ideally selling into the gap up morning spike, the push the next morning. Um, yeah. So looking at the intraday chart, um, on this example of buying the first green day on GHSI, the dip buy option would have been, the best option to take. In the morning, it broke out, had a nice spike, and it dipped back down to the VWAP area, and that was the ideal entry at 10 o'clock in the morning. From there, you have decent risk reward, and you're never underwater in your position. The next morning, if I dip by it here, I'll probably be taking some profits into this spike and probably holding the remainder for the next morning. As you can see, after hours, this is a listed stock. It actually trended up even more after hours. And the next morning, it opened up with a gap up and it spiked up a little bit. You have plenty of time to sell into this push in the morning, right at 9:30. So this was a perfect example of a first screen day setup on GHSI. So here's another example of first green day on this OTC stock, Pura, Pura. One thing you want to take away from this slide is, this pattern is predictable and repeatable, which makes it, very functional in your arsenal of trading tools. So here in October 2018, I had a first screen day and gap up, morning spike. In March, later on next year, or later on the following year, it had a first screen day, gap up, morning spike. And then September, later on that year, it had a first screen day, gap up, morning spike. So, this is what it looks like on the chart pattern when you're looking for former and recent runners that have a history of spiking multiple days. This is the type of price action you want to look for on the daily chart. Also note the volume on each of the first green days. How is way bigger than the average volume on any of these other days. So those are volume breakouts that I look for. So on this intraday chart of Pura, um, the best time to get into this stock was the the afternoon higher day breakout, close to 3 p.m. So it spikes up in the morning, comes down, and comes into a dip right here. Um, this is also a great entry to buy. As you can see, it triple bottoms right there. But if you want to be safe and don't have to hold through midday trading, or if you're a part-time trader who doesn't have much time to be monitoring the markets through the whole day, you can come back and start looking at the markets around 2 p.m. And usually that's when these first green day setups start to curl back up and spike to break over the high of day. And when that happens, that's your entry point. Buy in here, and then ideally, if I bought right here, I'll be selling some into the close and keeping some for the next morning, because the next morning it gaps up and has a morning spike. But like I said before, it's also to take note of where the intraday support is on this chart. The 850 is supported. It's supported not once, but twice, but three times. And then the next time it made a low, it made a higher low. So technical analysis plays a part. Got to learn your technical analysis. But this is a perfect example of a high day, power hour breakout on the first green day. So in this example of L buy, um, we have a couple of first green days. Um, right here, first big green day, big volume. Next morning gaps up, pushes. And later on that year, or a few months later, I had a first green day, gap up and push. So, and note the volume. And same repeatable pattern. It spikes up in the morning, puts in a high, and on that, right in the afternoon, when it pushes past the high day, that's your entry point. The high day breakout close to 3 p.m., 1500 hour. This one was a little bit later in the day, but really the later the better because you're protected from the market close. And next morning it pushes and spikes up, and you want to sell into the strength. So I want to show you some more. This is an example of F cell. It had a first green day right here. The next day, gapped up and spiked. And you want to be selling into the strength. Here's the first green day on the intraday level, or having the intraday look. Right here is that 1500 hour where it breaks out over this higher day. And when it does that, it pushes. Next morning, it gaps up, it opens up right here, and it spikes. Sell into that strength. Same setup. It's predictable, repeatable, and profitable. Oh, sorry, I got the wrong ones pulled up. Hang on a second. So this is the pure one, GHSI. So here's another one right here, CLSI. It was having a first green day right here. And on that day, it spiked up, came up, had a higher day break around the 1500 hour right here is when it's breaking over the morning highs, and it pushed. So many examples of these first green days, and they are repeatable. So if you can learn one pattern and just master this one pattern, do this trade 10,000 times until you're basically automatic with it, until it's muscle memory, then you'll be good. It's not complicated at all. So here's SSI. SSI had a first green day right here, put in a high, then in the afternoon it consolidated. And this one was a little bit earlier than the 1500 hours, about 12, 1 o'clock when it actually broke out. So it's not as ideal whenever it's this early. But nevertheless, the pattern still played out and it kept pushing. So just always remember, trading is not an exact science. It's more like an art, you know. So the only thing that should be exact is your risk management. But definitely wanted to give you some insight into my favorite pattern of 2019, that being that first green day long. Hopefully you're able to, get something out of this video that makes you a little bit more profitable. Have a happy holiday.